This is Ron Brown. It is August 26, 2023. Before I get into the presentation on money flow in and out, I want to acknowledge the passing of a good friend and a major contributor to HGSI and to the Skype board. Paul was very active with the software and in the group, and it at the seminars that Ian used to and I used to put on. He came several times with his wife Amanda. Anyway, a very sad week for everybody who knew him, and he is missed, and we'll miss his voice and his contribution to the software and the process. He was always coming up with good ideas to share with me and others. Thanks, Paul, for everything you contributed, and rest in peace. Before I go any further, here's my standard risk disclaimer. Any stock, index, or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. Now I'm going to talk about the user SmartGroups that I put in last week, money flow in and out. But before I do that, I want to go into my market analysis user groups. I'm going to click on the broad market indices, remove the filter so these indexes show up, and I'm going to click through to the warehouse, and then I'm going to move up to my top-down scorecard views for HGSI index analysis, and you can see what happened here on these indexes yesterday. When I started on raw combo, you can see that the leader was utilities, followed by the Dow, and then 100 stocks, the top 100 stocks in the indexes and in the ETFs, and then the S&P 100 and so on. But everything was positive yesterday. From the beginning of the week, there was enough gain yesterday for some of these to show a positive number here, and also for 5 days. It was a very volatile week, as you all know, and yesterday it kind of, after Powell spoke, it kind of settled down, and that's we're going to take a look at I think I'll use the S&P 500 index, and I'm going to make this full screen, and then I'm going to go in here to my HGSI index charts, and let's just start at the top and run through these quickly. I don't want to spend a bunch of time on this because there's all kinds of market analysis, but let's just make this full screen, and I'll point some things out to you. And I have a drawing tool here, which I'm going to open. I'll bring an arrow up. Now, like I said, this is the S&P 500 index. This red line represents distribution, and you can see that it was going up, but now on the S&P 500, it is turning down for the week. Now I'm going to change my timer on here so these don't stay up as long. So down. Now it was going up, and the A, this is E accumulation, this is A accumulation. Now you can see that over here. Now here is A and B and D and E. I combined the two, and you can see that these don't move as quickly, but the D and E have flattened out, and the A and B are still going down slightly. I want to move down to the next view, and this view shows us a rotation of accumulation within the S&P 500. Once again, here's the E and the A, but this represents the D accumulation. It's still moving up. The C accumulation is yellow, and you can see that it was going down, but it's starting to move up. And the E distribution is going down, and that money is flowing into the D and beginning to flow into the C and a little bit into the B, but not into the A yet. So this gives a view of accumulation distribution for whatever index you have in here. It's a powerful tool. It doesn't get down to specifics, of course, but it gives a nice overall view of accumulation distribution. Now the next one includes the Chaikin indicator, which is money flow 21 days, and you can see that this started flowing out back here. I'll bring my arrow up again. You can see the outflow actually began here, and it went from B accumulation to C accumulation to D distribution, and these red bars are actually sell signals based upon money flowing out of the market. Now the green, these are buy signals, and it works pretty well for the broader market. Need to get up here and resize this window, and I'll put a crosshair in here. Going back here, you can see the S&P 500 when this Chaikin turned positive and this turned green up here because the acceleration and the velocity were going up. This went from C to B. Bring my arrow back up so I can point this out. C to B to A accumulation, and it stayed there for quite some time. And then you can see as this percent AD line started going down, the market was going down too. Now the fan is still up on this, so this market hasn't really totally given up yet. These are distribution, heavy volume days on the distribution. Now what I'm showing you here, this is unique to HGSI. You can't do this anywhere else. Okay, now here's a chart with the advanced decline line of the S&P 500. If you look over here at this box, it tells you there were 373 advancers, 123 decliners, and so on. And we can start seeing after this bottom here that there's a little bit of money flow starting to go back in, or accumulation, I should say. Now this is a percentage of stocks above their, get my arrow back here again, their 20-day, their 30-day, their 50-day, and their 200-day moving averages. And you can see that these have been going down, but they're flattening. The percentage is flattening on all of these. Now, on the 200, the percent above the 200, it's just pretty flat. Now, if you hit your alternate A key, or alternate I key, I'm sorry, this brings the information up, and if you're on the last day, it tells you the percentage above these moving averages. And if you go back in time, now at the peak back here on the percent above the 20, it was 88.76%, and as the market started rolling over, you can see that that number goes down, and it's currently at 21.49. Here it was 12.05. So this is sensitive up here as the market starts moving up. And let's take a look here at the percent above the 30. Currently, it's, get my arrow back up here, 19.88%. And if I go back here, 15.46%. So it's improved a little bit. But this is very powerful to see what's going on. And I'm doing it on the S&P 500, but you can do this on any index. This is the NASDAQ 100. You just drop it to what you're looking at. If you want a broader look, use the S&P 1500. I'm going to go back to the 500 though and continue this. These are this is something I came up with probably 15 years ago, buy-sell signals based upon advancing declining volume, and both force indexes, the 2 and the 13, and the volume point of control. If these all line up, if you get a dark red signal like that, it means everything is bright red, so it has to be more than 5-to-1 decliners and 5-to-1 on the declining versus advancing volumes. The lighter red are 3-to-1, so you can see there are a couple of sell days. We didn't really get everything lined up as this market was rolling over. This is why you look at multiple indicators, these charts, and you can get a feel for when money is flowing out. But on the big moves, let me go back here. Let's see. Here was a buy signal right here. You can see these all lined up on green. And then these are secondary buy signals. Here we had a sell signal, a little bit late. Didn't have the major sell signal until here. So sometimes they're really pretty late, and other times they're really good. Now, this was a no good signal here, but it's just one more thing to look at. This is the same thing without the fan. Now these are internals, just another chart, and it shows you if these are trending or not. If it's in everything's down, it's of course bright red. If it's trending strongly and everything up, it's dark green. But anyway, up here, this is the AD line, 20-day moving average on it, and you can see the AD line is starting to flatten out on the S&P 500. This is a percent above the 50. This is just a larger view of it. You can see momentum has slowed. Momentum to the downside has slowed, and we're starting to see some interest, maybe to the upside or building to the upside. Okay, this is the AD line again. And there's detailed information up here in this box. This is one nice thing about HGSI. You can put these warehouse fields in here and get a lot of information about what's going on. I'm not going to read all these. You can do this yourself and figure it out. But it's just really shows you the strength or weakness based upon accumulation, advancing, declining, and so on. Okay, moving down to the next chart. If I can get this back over here. This is just the force indexes 2 and 13. You can see the 13 is still negative, but the force 2 turned positive yesterday. It's been chopping around with the market. When the market's in sync, when both of these are positive or negative, it's a pretty good sign that the pressure is going in that direction. Okay, now this is the McClellan. This is chart number 10, the McClellan oscillator. First of all, we have the index-based arms indicator here. Tells you advancers versus decliners and the percentage advancing, declining. This McClellan oscillator is, I'm going to edit the indicator. If you do this and then click right on it, it explains what it is. It's a breadth indicator computed from the difference of the 19-day EMA and the 39 EMA of the difference of advancing versus declining issues. It's an indicator. It's been around a long time. A lot of people use it. It's a pretty good overbought, oversold indicator. You can see that I have my crosshair on here. This actually got lower than this area over here and about the same as right here. These are oversold indicators. It may not turn right away. You can see it didn't right here. It based for a while. And then The selling wasn't as extreme here, but here it got pretty extreme recently, and now it's started to go back up, which is an indication that money is flowing back into the market. And finally, this is a chart I put in not too long ago. It incorporates the AD line, accumulation distribution, plus the money flowing with the AD line is percent AD is green and velocity is red, and you can see these are going down, but the velocity has turned up a little bit. So it's starting to see some slowing down of the market. So these are the charts that I look at with the HGSI indexes. These indexes are computed when you do your update, and you can get a lot of insight into what the market is doing. Now, the ones I use the most are I got away from my chart. Sorry about that. Okay. I look at all of them. This one I use a lot. It really shows me the structure of the market. This one I look at. Like I said, it's late sometimes, but when everything is going in a direction hard, these bars will show up. And I look at the McClellan quite a bit. Those three I look at the most probably, but I do look at everything because I want to see if accumulation or money is flowing in and out of the market. Now I'm going to get out of here. I'm going to just drop down to some of my regular charts that I use. And I'm going to go into the designer. Now, last week I talked about money flow. I put these user SmartGroups in here. I've made some slight modifications, and I'll show you that. But here is the first one. I didn't change this one. What's required here is that these stocks, the requirement is, and I need to get into my scorecard view and sort on the percent industry price change. You can see there are 136 stocks in here. And remember, these stocks come from two user SmartGroups. It comes from, I'll point this out again, comes from the Woodward and Brown stocks and groups moving to the upside and downside, and also 100 stocks moving up and down end of day. These are stocks that are captured at the end of the trading day every day that were strong or weak at that time, and I combined the two of them to come up with these money flow scans. The reason I did that is that the combos that drive these two are different. The Woodward and Brown use what I call the demand combo. It shows the demand at the end of the day. Not all the stocks are up, but these right here at the end of the day, these stocks had to be up in these groups. So this gives me a snapshot of what was happening at the end of the day. So by combining those two groups, I came up with what I call my money flow in and out. And I'm going to click through to the warehouse again, and you can see, well, let's just do this here. This is the industry. What was flowing in when combining those two groups at the end of the day? Application software, biotech, infrastructure software, specialty pharma. Now in this money flow, I require that the industries be up for the day and also since the beginning of the week. And you can see that both of these columns are green all the way down here. Now this is 5 days right here. So the 5 days ago, this group, renewable energy, comparing the price of 5 days ago to currently, it was negative, but there was some money flowing into it yesterday. And by requiring that both yesterday and since the beginning of the week be strong, this gives me a pretty good idea of where the money is flowing now. Now, if I want to concentrate on stocks that are showing VPA flags, I can just come over here and do that. So let's just take a look here. Here is Hasbro. And if I bring that up, you can see that there's an effort to rise here. The group is moving up, so money is flowing into this stock and into this group. Let's try another one. Tesla. Now the group is really just starting to turn up, but money is flowing into Tesla as of yesterday. The group had to be positive both for yesterday and since the beginning of the week, and it looks like it was, but it was really choppy. But this can't be perfect, but I think it gives a good idea of what's going on now. Something I just put in this morning, which I think you might find of interest. Let's say if you're only interested in trading stocks that are in the NASDAQ 100 or the S&P 500, if you click on filters over here and you scroll up to the top under my filters, I'm going to scroll up to the top. The easiest way to find these is just to make sure everything is collapsed here on the structure. And I have group member of indices or group members of sectors. I put these in so if you only want to look at stocks that are trading in the, let's say the S&P 500, you click on that and apply it to this, and this eliminates all stocks unless they're a member of the S&P 500. Now, you only may be interested, or you may be interested only in tech stocks. So let's go to sectors. If you click on technology sectors, it eliminates everything but the tech stocks. So if the tech sector is starting to move, and you can see that a lot of these stocks are tech stocks, you may want to just isolate on that and concentrate on these stocks. Now I'm going to go down to my next money flow. There's no industry group requirement here, so I'm going to reset my filter just by clicking here, and you can see that here's a group right here that is not up since the beginning of the week, but it was up yesterday. Now on this group, I'm requiring that the stocks be up yesterday, not necessarily the groups, but the stocks. So let's sort on the industry group here and look at this. While I'm right on refining and marketing, you can see that all of the stock prices are up. So the stock price is up here on Sinclair. The group was up, but you can see that beginning of the week and 5 days it was down. So what I'm seeing here are some groups that are industry groups that are showing strength and stocks that are showing strength in this particular instance. But if I go down here to the semiconductor devices, the semiconductors group was not up yesterday, but yet this stock appears because the price was up. So I'm seeing maybe a little accumulation in this stock, but I'm not getting confirmation on the group yet. So I don't see, there's not money flow into the devices, the semiconductor devices. If I come back up here, I don't see the semiconductor devices group. And one of the reasons is NVIDIA, after getting run up and overhyped, was down again yesterday, and the semiconductors were, as a group, were hurt yesterday. So this is on the upside. These stocks are up, but the groups are not necessarily up. There's 187 stocks in here application software dominates here also, followed by biotech and then infrastructure stocks. Now, on the money flow out, I'm requiring that these groups be down for both the day and the week, and you can get a good idea of where the weakness is here, where money is flowing out. Here's the airlines. You can see that stock, a lot of money flow out there. And let's take a look at defense primes. Money flowing out there. How about marine shipping? Money flowing out on these stocks. So, only 52 stocks yesterday though. And then finally, on this one, 149 stocks, and I'm requiring that these stocks be down in price, but the group's not necessarily down. So I'm seeing outflow in these stocks and these groups, but the group was still up, but there are 3 medical equipment stocks where the money was flowing out. Now, like I said, this is still experimental. I may change it yet, but I think it's going to give us a pretty good idea. Now, let's go in here, change the filter, go up to the top, group member, sector. Actually, I'm going to do the S&P 500 here. And these would be the S&P 500 stocks where the money is flowing out. A lot of names we recognize here. Anyway, that's it for this week. This is getting a little bit longer, and I'll go into this more in depth, but I like this concept, and I'm starting, if you're an Insider Club member, over the past couple of days, I am starting to track I have to get up in the right spot here, in the non-index money flow in and out. I've just got a couple of days so far, but you can compare days, and I'll get into that more in other videos. Anyway, thank you for listening, and I hope you find value in these videos, or this video. Thank you. Have a good week.